Welcome to the program. I'm Mark Imperial. This segment's being brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done to educate consumers, grow their practices, and to leave a legacy. I'm doing a series of spotlights on remarkable advisors from across the country. And joining me on this segment is Alexander Fleiss. He's the founder of Rebellion Research. Alexander, welcome to the program.
Oh, thank you so much for having me on. I really appreciate that.
Tell us a little bit about your work and specifically, who are the types of folks that you help?
I work with large family offices, small investors. Rebellion Research has both a hedge fund and a robo advisory. So we can take, a $2,000 account from Vietnam, and then take a $20 million institutional office from Hong Kong. So it's available in 60 countries, and I also teach at a number of schools as well.
So it sounds like there's a wide range of folks that you're able to help. Do they have like some common challenges that you hear all the time? What are the big challenges that your clients face? Can you tell us about those?
Yeah, most Americans are not financially savvy. They don't know how to invest their money. They don't know where to put their money, and a lot of them also don't trust human beings. And so the initial kind of customer base of Rebellion Research was a lot of people who didn't trust human beings. Now we get people who want AI to run their money on top of that. So, there's that segment. But we also just take many newly wealthy clients who are looking for a sound place to invest their money. Our AI invests in a conservative stock index and also offers a fixed income strategy that has no correlation with the US market. So we really try and offer kind of a hedge fund strategy to clients of all types.
Fascinating. I'd like to dig into some of that AI. Can you tell us about the artificial intelligence and what really drove and inspired you to get into the artificial intelligence?
Sure. I went to the National Math Championships about 22 years ago, so I've been working with mathematics for a while. And one of my good friends, Dr. Spencer Greenberg, had been working with machine learning at NYU with a very famous machine learning teacher, Jan LeCun. And Jan is considered the godfather of deep learning, which is the type of AI that can read numbers, letters. So without deep learning, we would never be able to have a technology that could read writing. So deep learning is extremely useful. But by having this close friend who was studying with this renowned AI professor, I got great instant access to the cutting edge of AI before AI was even a thing, really. So I was very lucky to kind of fall into AI, and I found it to be just the most useful, obvious, practical technology one could ever work with. The idea of not using AI was almost insane when you found something that could so consistently make intelligent guesses. And when you look at investing, there are tens of thousands of data points per stock. It's extremely hard to make an assessment that's consistent. You can spend all night researching something and miss the entire story of what's going to drive the stock price. And so with Rebellion Research, we kind of assume that there are too many data points for each stock price. And we take a Ocean's 11 approach where the house always wins, in which case we try and buy the stocks that have the highest odds about performance. And may the odds ever be in your favor. And that's what we want at Rebellion Research. So we're looking for 50, 100, 200 factors to correlate with stock outperformance, from smart manager holders to good valuations to strong countries, strong industries. And one thing the AI has taught us is that there's no type of investing style that works all the time. Sometimes value works, sometimes growth works, sometimes macro works, and sometimes it's all about momentum. And that's obviously a market we're in more today, where it's a lot more momentum based. But human beings are very repetitive, very stupid creatures, and so kind of creating an intelligently cured portfolio over time will consistently outperform human beings. Of course, there'll be pockets where certain forces will drive the market, and the AI didn't see any fundamental reason for that happening. And there may not be a fundamental reason for that happening. Humans might just decide they like that area. So that's something interesting about working with AI. You learn the faults of human beings, and you learn what consistently human beings will do that will lose them money, from selling at lows to following too much analyst advice to ignoring 90% of the data to focus on 10% of the data. And so you hear so much talk about data, but depending on how you look at any data source or data set, you can have two different stories. People joke about Star Wars. You can look at it from one angle where these are the good rebels, or these are the misbehaving rebels who should be put down by the good empire. I mean, there's many ways to skin a cat. And with AI, we kind of assume that we're going to be wrong a lot. We know we're going to be wrong 40% of the time. And when you do that, you assume that either kind of road could work. You don't know which road will work. Will airlines go up, or will energy go up? Or in some weird world, will they both go up? As it has happened. So you're looking really just at patterns and the movements of patterns. That's all we're doing. We're looking at patterns in the stock market to drive investor return. But we create a ton of research. We have hundreds of professors and admirals, NASA astronauts who write and assist with our research. And we really are about educating the world. We have research partnerships with nearly a dozen schools now around the country, and our alums are taking great jobs at the biggest companies. And so, Rebellion Research is kind of a school, really, as well. It's a think tank, asset management firm, and a bit of a graduate school. So, and we have about 4 graduate program directors who sit on our board. So we've gotten kind of a little more institutional about our graduate work and our research. And we started putting out a lot more research consistently. And that research benefits the students, benefits the world, and it's also a lot of fun. Deep down, I always wanted to be a teacher. So starting this tech finance company, it happened, but it wasn't my main intention was just to be a professor at some small school in Maine or something.
Sounds absolutely fascinating, this artificial intelligence, and for hundreds of data points that it's analyzing. You mentioned that it even analyzes the people running it. Can you give us maybe a 10,000 foot view of some of the big pillars of what it's pulling, and how are they actually getting the information on the people?
Of course. So, we look at pricing data. So we're looking at the momentum of the actual stock itself. We're looking at the financials of the company. We're looking at the holders, the economy. And so we got a lot of great press, and we actually made the cover of the Wall Street Journal about a decade ago for being one of the first entities anywhere to go very negative on Greece. In summer of 2009, our AI felt the Greek market was going to crash, which it did, but it took several months for that to happen. And the first major reporting, research, or ratings agency to actually even downgrade Greece was, I think, Moody's in October. And so we had an F rating in Greece by July. And so we have a very sensitive system, and it's very sensitive economically. And so what happened was with Greece, you had bad industrial output, bad retail sales, you had an expensive market as well. Whereas our AI sees across the border, Germany and in France, strength. And so the AI was like, oh my God, what's going on? I don't understand it. This is a total F. By the way, it will often say, the AI will not understand something. And so maybe 70 to 80% of the time, it can't make a high enough confidence guess to actually rate the object. And so it'll look at Italy and it'll say, it might go up, but I'm only 52% confident of that. And that's not a high enough confidence ratio to actually make a prediction on Italy. And so unfortunately, the AI system can only really predict on 15 to 20% of its universe at any given day. And the universe is about 11,000 global assets, 55 countries. We're able to discern a rating for each country, but to actually make a prediction to trade for our clients takes a lot of confidence. And so the AI can say, okay, Italy's an F, but my confidence in that F rating is very low. And so we're not going to short anything Italian for our clients.
Sounds interesting. So it sounds like I always say accurate thinking. So obviously the AI is only going to think accurately, but maybe not taking into consideration some of the human factor. And that's where the humans come in. So is that why you still need humans to analyze sort of the data and the predictions that
Oh,
the
yes.
machines
No, no,
bring
no,
in?
no. The best AI in time will be AI and humans working together, without a doubt. Human beings AI is still very dumb. It's still the dawn of the dawn. We really are still. If AI is the new world, we're barely at Cortez burning his sails. We're very, very, very early on, and AI is very overhyped. It's still very stupid. Machine learning, which is the branch of AI preoccupied with understanding its own decision making process. That is getting places, but in a very, very, very specific application. And once you move the data set or you disturb the data set just a little bit, you get terrible, terrible results. Take, for example, the Boeing Max. Uh, you know, just some faulty data and the plane crashes. Unfortunately, that's how AI works. A little bit of faulty data and it's an absolutely useless system, and your algorithm will crash.
Alexander, what you mentioned wanting to be a teacher, take us a little further back. Like, what inspired you to even get into this field with finance and especially with AI? How did you get started?
I was born, slightly autistic and deaf, and I've always had a preoccupation with programming and mathematics. Human interaction was always tough for me, so I always liked working with numbers. But actually, getting into AI was just I met the right math student in school and went down that track, and I could very easily end up just being a professor, and that's probably where I would have ended up being. So luck has a huge component to life. Without a doubt, luck is a gigantic part of success. If you look at many of the billionaires out there, 6 months before or after, had they had done their application, they would have failed. And so luck is a lot about timing. You look at John Paulson, who was the largest profiteer from the 2008 financial crisis. Had he been 6 months earlier, he would have gone bankrupt. But instead, he wasn't. He made like $10 billion. So timing is very important. And timing has to do with luck, really, at the end of the day. There's a Harvard Business School professor who has everyone, pull out a penny at the beginning of the semester, and everyone, heads or tails. Okay, everyone with heads, stand up. Okay, everyone heads again, stand up, stand up. Finally, one person left in the class, and he goes, okay, you're Warren Buffett. I don't think I agree with that. I think Warren Buffett has a ton of skill, but you do need to mix in a ton of luck. No matter how much skill you have, luck is very important. I mean, you look at a Glenn Greenberg, who built a gigantic company. He fought with his partner, and their company split. And he would have been much bigger and much, greater of an investor had his company not split 10 years ago and gone backwards for many years. And so, human relations is very important. The most affable people are the ones who generally, get ahead. So, you look at, for instance, my own family member, Larry Silverstein, when he was negotiating the World Trade Center insurance settlement, he had a lot of people who were on his side and wanted the World Trade Center to happen because he had, spent a career, being a good, honorable person. People could believe and trust in him. So it's very important to have great human connections and to cultivate trust. When you can cultivate trust with others, people will give you the benefit of the doubt, and everyone needs the benefit of the doubt at some point in business.
For folks listening that would love to connect with you, fascinated by this and would like to learn more, how do they find you, connect with you, and learn more?
Sure, they can go to rebellionresearch.com. Check out our articles. They can email me, alex@rebellionresearch.com. Friend me on LinkedIn. I accept everybody. I've got nearly 30,000 followers on LinkedIn, and I literally will respond to every single message I get. Uh, you know, I'm an educator, so conversation education is my favorite. And please do contact me.
Alexander, this has been terrific. You've been great. I really appreciate you taking the time and sharing with my audience today. And I wish you continued success for you, for Rebellion Research, and for all of your clients.
Thank you, Mark. Wonderful. Be well and have
Alexander Fleiss. He's the founder of rebellionresearch.com. And this segment's been brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done to educate consumers, grow their practices, and to leave a legacy. That's all for now. I'm Mark Imperial, and thanks for joining me.